Opening bell, low volume here, low volume here. How does the liquidity work in the option call side market? How does the liquidity work in the put side market? When you have a low volume price action tape in play, you look at the 570 call, bid and ask. It was $2 wide. You can see the bid is $17.70 by $19. How do I make good on that entry? I'm going to show you how to put that out there right now. Put that limit order out there at 14.70 right here on that liquidity flow, because that's the lower end of the market. They closed at 20.30. They marked them up. That put's got a 50-cent mark. I've got a 90-penny mark. Positive put right here on that 585. That 580, which is out of the money, below the market, it's got a 50-cent print. But once again, it's all about the liquidity ratio in the put side of the market, liquidity ratio in price action within the low volume print here, and how these markets are going to adjust themselves, how wide that bid and ask is affected with the low volume liquidity on an opening bell. It's called opening bell volume. And it's very important that when you are going to make a market, that real markets are not made until later in the day. However, you can steal the bid over here and sell on the ask and make a profit with the wide bid and ask that we will teach you how to master like we do. Get your entries, people. I gave a bid out here in Priceline in pre-market, and I'd be damned if you didn't close at 472.50. What was the bid that I gave? I believe it was around 466.75. So you're going to let 25 cents get in the way of a $2 move. That doesn't make sense to me to have that kind of concrete thinking when I gave you that bid in pre-market. And it hit within 25 cents of the low. 475 was a high. You come down on that short. You come down and you hit close to that. And there is a pop in that price line. Price line definitely qualifies with a 1, 2, 3, 4, 5, 6 teeny drop. And what is a teeny? Well, we'll explain it to you. 89 cents per line to the frickin' penny right here. And that's how that bottom on that opening bell, in a 9-minute opening bell on 11/29/2011, of how the short ratio played its course, and watch how it works. I gave bids out at 466.75. We hit the low was where it could have been bought and sold already. The short was where that play is. They walked it up. They hit that thing. How do you know how to short with the platform? I can show you. I'll show you. You want to see it again? It's right here. Bam! Price line. Opening bell. Bam! 10 minutes. Opening bell. Slide that bid. Qualifier. 1, 2, 3 teenies. Breaks this right here. Breaks that bar. Comes down. Makes that bottom up move. And that's how trade management works on Priceline on the opening bell. Priceline opening bell. We have a limit order out at 960. What we will do, based on how we're bouncing, is we'll cancel that limit order now, and we'll put that limit order out. Once we break the high, the closing, once we break the PC, previous day's close, once we break it, then if we're not executed at 960, we will put the limit order out at $10.50 once we break the PC close. And here it is now live. That is the parameter within the $600 trade management. But you have to, right now, we're going to let this move, try to prove itself. You've got positive bids coming into the market. Pretty nice. It's live. That's why it is what it is. So MMTs, yeah. Everything seems to be working for you. Look, hey, if this goes into positive territory, we would want to add a contract. We would want to add a contract. There's that one teeny, two teeny. There's your qualifier, three teenies. Mike, one teeny, two teeny, three teeny. Bill, three teenies up. All right, cancel it and put it out higher. You're at 90. Hey, it's throttling. Give me the bid and ask on the $600 call. 910 by 940. Well, yeah, put it out there. Yeah, we gotta blow through that though. That high is only 587.88. There's your ranges. You have it there. You got to break through that previous day's close. You got to take out that close yesterday. You got to take it out. And you got to take it out with three teenies. Here it is, 3, 6, 9 on that breakout bell. Guess what, folks? It's all about short-term 950 by 990. We're out to sell that $600 call at 1050 because we're breaking up. It's here. It's live. It's a 3 diamond alert in that quality one. I should have other MMTs buying that $600 call. All of these calls, there's 3. One went off at 1684 here. Another one on the low over here was at 21 to 23.50. That $600 call needs to make its adjustment based on the fact that we have broke out. This is a 3-minute qualifier breakout. Everything that I said on the video, burning at 97. You went into positive ratio, which also made that breakout. Here it is now. Here it is now. The other people, you still have a chance to add a contract. If you didn't take one, you can buy a $600 call. It's before they go too high. Cancel the 1050, put it out at 1150. Put it out at 1150. I've got a clean breakout on Google. I've got a massive qualifier. I've got a massive 3-minute. Look at that. 1 teeny. 2 teeny, 3 teenies, right to the teeny line. Is anybody in denial? That's how accurate it is. Let us not be in denial.